Good morning, traders. It is Tuesday, 8:01 a.m. Chicago time, the 23rd of February, 2016. This is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall sentiment overnight, with crude oil being down just 0.27%, gold being up 1.09% or so. It's actually fallen off a little bit since I did my homework this morning. U.S. Treasury futures down 0.45%, and the tens, those are the bonds. The tens are down 0.19%. The Bund is down 0.33%. The Asian markets, the Nikkei down 30.37, Hang Seng 0.25, and Shanghai 0.27. And the yen is up 65 bips. DAX, FTSE, and CAC are all down between 0.8 and 0.5%. U.S. equities are flat. Equity futures and U.S. dollars also flat. So what that tells us is the risk appetite overnight, and as we stand right now, is off. Money's moving into metals and away from the riskier assets. Markets showing allocations to safety or neutral. Key news items, two things. BHP Billiton cut its dividend for the first time in 16 years. And also, JP Morgan's holding its investment conference. Jamie Dimon is stating that earnings have been disappointing, says they see consumers spending their savings on energy. That money's being spent probably mostly healthcare. And consumer debt servicing ratio is lowest in 35 years. He also says that their view on China and its problems is that China will be developed in about 20 years. Will be a fully developed economy, and that's how their investment stance is. As far as what we've got for today, we just had Case Shiller. Case Shiller came out. Case Shiller came out at 0.8% versus 0.85%. Estimated 5.74 year on year, 5.74% versus 5.8%, slightly off of expectations. Looking ahead, we have consumer confidence, U.S. consumer confidence at 9 o'clock Central, 10 Eastern, expecting 97.3, and an existing home sales expecting 5.34, and Richmond Fed expecting 2, all at 9 Central, 10 Eastern. And then we have a bunch of speakers, actually already. ECB speaker Nui, Fed speaker Fisher, releasing comments. Fisher speaking on monetary policy in Houston, and currently ECB speaker Costa speaking, and then and also at the same time EU speaker Blom speaking to the EU Parliament, and BOE's Haldane speaking at 11 Central, 12 Eastern. So a lot of chatter. Other than that, let's take a quick look at what we did yesterday. But first, let's just take a quick review of what our primary hypothesis was. You could see this from yesterday's video, that the primary expectation is for us to push through towards that 1940, take out the overnight high, and respond back towards 1930, 130.50 for a pause, and then expected a retest to 27, and then potentially, if I forward this a little bit, potentially a test down into the MC point of control at 22.75. That was what was expected yesterday. The secondary hypothesis in this video, let's forward that. That's what the secondary hypothesis looked like. The expectation is for it to move lower, make an attempt lower responsive, find a base, and then push through to that. This actually continues to 1940, and the expectation is for failure and then for it to pull back. As I said in the video, a break of the 1940 is not expected to cause a quick run to 1950. Generally, those kinds of failures would push through and then pull right back to the most recent value. And yesterday was actually a fairly difficult trade, as the market did not, after, I'll give you a show of it, after, having wide ranges and some pretty good runs. Yesterday, on a relative basis, if you look at, these are daily profiles, if you look at these profiles, pretty decent range, some pretty good price discovery. We still have that gap zone below us. But yesterday was very compressed. You could see that the profile was very tight. It did hit on our overnight stat, so that was fulfilled. It did hit on our IB stat of 98% or 97% break of the IB higher low. That was fulfilled. But it kind of acted as an island. A um, it left a gap zone below, with the center of it being 1930. And the expectation really all day yesterday, for me personally, I was talking about it in the S5 chat room. The expectation was for it to drop, and it just would not do it. A couple of attempts here, looking for it to break the 3650 area, and for it to fall back into the opening swing, break to the other side, go neutral, and start moving towards the 27. That was the expected reaction. It waited till the 3 o'clock close, or 4 Eastern cash close, and then it finally let go, and it finally broke down. And in the overnight session, it basically drifted down into the 2450. Didn't quite get to the MC point of control, which is this little black line here. Um, Let me expand that out so you could see the MC that we drew yesterday here. Didn't quite get to it overnight, but it got pretty close. And then on the European Open, the market took a strong bounce at 2 o'clock Central AM. Took a strong bounce and brought us back to basically where we are now. We are against yesterday's close. We're trading basically yesterday's close at 35.50. That's pretty much it in a nutshell. Tough trade yesterday. Very strong kurtosis on this profile. So when we look at the price action here, this is a 2-tick Renko. Generally, I cannot fit a whole day's worth of bars, 2-tick Renko bars, on one screen here. I usually have to scroll back and forth. But with Renko, of course, the reason I use a Renko is because it does not print a bar unless something is happening. And you could see that you could fit the whole day into one screen, leaving us with the feeling that we were trading ahead of a holiday or something. But of course, we did not. We still have some pretty weak structures below us. The market has really it has rallied like a stone skimming water, just touching the water, skipping, touching the water, skipping, touching the water. That's essentially what we've had on this rally. So when I move out here a little bit, actually this chart is better to show it. So when we look at how we've rallied from this low at 1805, we've just skipped along. We've just skimmed along. We've had this nice little pause here and a pullback, which set us up for 1940, which we finally got yesterday. I talked about that last week. I did say that I'm expecting 1940 in the next couple of days. We finally achieved that, but we've left gap zones all along. We have a gap close here all along as we push up. So this has happened very, very quickly. There's a very large gap close underneath. And so this is not the best structure for continuation higher, in my opinion, even though the market has come back from the drop overnight. I just don't see this as being an ideal structure for for folks to continue to commit to the long side. I expect today, even though my primary hypothesis coming into this morning, which has changed now because of the market popping up here back towards the 39, the expectation is for the market to be responsive up, test, and I expect it to fail and start to move lower towards 2275. That is the key hypothesis for today. So the primary hypothesis, responsive upwards. I expect a fair amount of resistance in the 3940 area. I'm looking for this area to be fairly strong resistance. I'm not telling you to, you know, liquidate all your assets and get short the S&P futures at 39 to 40. That is not the point. That is not a risk-based plan. That's just a gamble. It's a Hail Mary pass. It's just a gamble. That's not what I'm saying. What I'm saying is the expectation is for pretty formidable resistance here, which means that I should expect to push to lean on the short side and have it push against me a little bit before releasing and pushing down. But if it does not, and every trade only has a 50-50 chance, every single trade has a 50-50 chance, period. If it does not, then that's going to show me a lot. That's going to give me a lot of information that I can use for to adjust my analysis. So if the market responds and pushes through this 3940 area and starts to push up, we have some pretty good strength, and we need to start looking at the next areas up that are likely to be tested. But the primary expectation is responsive into the 3940 area. I expect it to run into resistance. I expect it to find sellers as it advertises higher prices. I expect it to find sellers in those areas. That's the most likely area. And I expect it to rotate through this gap zone that it left behind to this composite and continue to play into the gap zone down to the 16. There's a bigger gap zone here now, all the way down to 16 right here. That's the high of this day. And that day finished pretty close to its high at 14 and a quarter. So we have a gap zone between 33 or 32.50 and 16, and then we have a gap close down to 14 and a quarter, and I expect it to float down and get to the gap mid, which was the overnight low, was the gap zone mid between yesterday and last Friday. Basically to the tick here at 24.50. So I expect that to be tested again, and then I'm looking for it to try to continue lower as to establish a better base, to basically advertise for buyers and establish a better base for a push up. So my entire plan is look for a responsive buying. I'm looking to sell that responsive buying on the open. I'm looking for it to push as far as 39.40. I'm looking for it to stall, hesitate, turn over, and attack the 2275, and then start working its way towards 16. Between 40 and 16 is 24 points. That's pretty much the range that we've been trading on the downside. That gives us a pretty decent chance at the target down here. Okay, that's a pretty detailed plan. Not wishy-washy. What we've done this morning is we've reviewed what we said yesterday. We've reviewed how the market responded to it. We've looked at the current situation, and we've outlined a primary plan. There are other plans. I just don't want to spend 30 minutes talking about it. We've outlined the primary plan that we're gauging the market action against, that we're going to act against, and then we're just waiting. We're just going to wait for the market to open and show us what it wants to do before we respond. Again, always watch your risk. Don't be a gambler. Be a trader. Have a sustainable career as opposed to being a flash in a pan, come in, come out type of thing. Good luck, and I'll catch you tomorrow. Take care.